Hey everyone, welcome back to Corporate Decoder, the place where we decipher the hidden stories within corporate filings. And today we're diving into Reliance Global Group's latest 8K report. It looks like they've inked a deal that could bring in a significant chunk of change. But as always, there's more beneath the surface. Before we get into the nitty-gritty, if you love getting straight to the point insights from SEC filings, make sure to check out our Discord community linked in the description below. It's the perfect place to connect and discuss these exciting financial stories. Alright, let's get straight into it. Reliance Global Group Inc. has entered into a common stock purchase agreement with White Lion Capital LLC. Think of it as a deal where White Lion agrees to buy shares of Reliance's stock if and when Reliance needs the cash and can sell up to a total of $10 million worth of its own newly issued stock. This report Form 8K is essentially an announcement of a major event for the company. And in this case, that major event is this financing agreement. The key date here is August 26, 2025, the day this agreement was officially made. The company involved is Reliance Global Group, Inc. You might know them from their stock symbol, RY, on the NASDAQ capital market. They are incorporated in Florida. And here we see their stock, common stock, with a par value of $0.086 per share, is traded on the NASDAQ capital market. They also have warrants traded under the symbol RELIDIM. Now let's talk about the heart of this filing, the common stock purchase agreement. This is where Reliance has the option, not the obligation, to sell its stock to White Lion Capital for cash. This can happen over a period as long as White Lion can start selling those shares to the public. It's like a flexible line of credit secured by their stock. The agreement lays out how this will work. Reliance can tell White Lion they want to sell some stock by sending a purchase notice. The price they get for these shares will be based on the lowest stock price during a specific 3-hour window, right after White Lion confirms they got the notice. This is a pretty common mechanism in these types of agreements, and it can be good for the company if they need cash quickly, but it also means they might be selling shares at a lower price if the market is dipping. There are some important limits though. The exchange cap means Reliance can't issue more than 19.99% of its outstanding stock without shareholder approval. Or if they reach that limit, the average price for all shares sold under this deal has to be at least $0.91996. This is to prevent massive dilution, which is when too many new shares are issued, making each existing share worth less. Another key limit is the beneficial ownership limitation. This stops White Lion from owning too much of Reliance, specifically capping them at 4.99% of the company's stock, which they can bump up to 9.99% with advance notice. If they accidentally buy too much, those extra shares are essentially null and void from the start. This is to keep things in balance and prevent one investor from gaining too much control unexpectedly. The agreement starts on August 26, 2025, and it can last until December 31, 2027, or until all $10 million have been used up, whichever comes first. There are also some outs for White Lion, like if Reliance goes bankrupt. Reliance also has to pay a small fee, $10,000, just for setting up the paperwork. As part of this deal, Reliance will also issue $100,000 worth of its stock to White Lion as a sort of upfront payment or commitment fee. These commitment shares are fully earned on all part of the shares White Lion can resell. Then there's the registration rights agreement. Think of this as the agreement that makes sure White Lion can actually sell the shares they buy from Reliance to the public. Reliance has to file special paperwork called a registration statement to allow White Lion to resell these shares easily. They need to get this statement approved by the SEC as quickly as reasonably possible. Specifically, they need to file a Form S-1 registration statement. This document registers the shares that White Lion will be permitted to sell. This part of the filing, item 302, talks about how the shares being sold aren't being registered with the SEC in the traditional way, but are relying on exemptions. This is because White Lion is considered an accredited investor and the sale isn't being advertised to the general public. This is a standard way for companies to raise capital without going through the full lengthy registration process for every single sale. And finally, the filing lists the actual documents that back up all this information. Here we see Exhibit 10.1, which is the actual common stock purchase agreement. And Exhibit 10.2 is the registration rights agreement. These are the legally binding documents that govern the entire arrangement. This filing is all about securing access to capital, which is crucial for any company that wants to grow or simply manage its operations. It indicates that Reliance Global Group might be looking to fund growth initiatives or cover operational expenses by selling its stock. The currency involved in these transactions is the US dollar, and the units of trade are shares of common stock swapped. So what's the big picture here? Reliance Global Group has a flexible financing deal that could provide them with up to $10 million. This is a tool that can help them manage their cash flow or fund new projects. However, it also means they have the option to sell shares at a price that could be influenced by short-term market fluctuations. This type of agreement is often used by companies that may not have easy access to traditional bank loans or want a quick way to get funds. From a Warren Buffett perspective, we'd want to look at why this deal is necessary. Is it because the company is growing so fast it needs extra cash for expansion? Or is it a sign that current operations aren't generating enough cash? We'd also be watching how they intend to use this capital and whether their investment plans are sound. The fact that the price can be tied to a low price during a valuation period is a key factor. If the stock price is low, they get more money per share, but it means more dilution for existing shareholders. The exchange cap and beneficial ownership limitation are good safeguards to prevent excessive dilution and control shifts, which is positive. Reliance Global Group, like many companies, is always navigating the balance between needing capital and protecting the value of existing shareholder equity. This deal with White Lion Capital is a strategic move to ensure they have financial flexibility. The key will be how they deploy this capital and whether it leads to profitable growth that outweighs the potential dilution. Alright, that's our breakdown of Reliance Global Group's recent filing. What do you think about this type of financing? Does it signal strength or a potential weakness? Let us know your thoughts in the comments below. If you found this analysis helpful, give us a thumbs up and subscribe for more deep dives into the world of corporate finance. Don't forget to join our community on Discord, linked in the description, for even more insights and discussions. Thanks for watching, and we'll see you in the next Decode.